Okay, there we go. Okay, recording.
Hello, everyone, and thanks for joining the FinLink podcast. We have a very special guest joining us today, John Langston of Republic Capital. Republic Capital is a leading M&A firm for financial advisors and RIAs that are looking to transact or find acquisition opportunities, find succession planning opportunities, and a number of other services that they offer within their firm and organization that John will be talking about today. In this episode, we'll explore the shaping M&A landscape within the industry, which has been evolving quite a bit over the years, valuations, multiples, just an overall kind of feel for what's going on in the space. And, at FinLink, we've had a number of changes going on as well. So we're super excited to talk about some of the things that we're partnering up with John and his team on as we move forward into 2025. So thank you for your time today, John. And I'm going to start off by asking you a question.
Thanks for having me.
What's the most exciting deal or moment that you've experienced in your M&A career so far? I know it's kind of a heavy question, a loaded question, but I just wanted to jump right in and talk about what's the most exciting or the most notable transaction that you've done in your career?
Yeah, look, we did a transaction for a San Francisco-based firm. What was so exciting about it was that the firm, about 5 months before, had a valuation done by a very credible group. But we did some work with them to restructure the business, to change revenue, specifically to share some equity with their broader team and their advisors. And we ended up doing a transaction that was 3 times that valuation done 5 months before. And the owners were just astounded. And one reason it was obviously we were thrilled to give them that kind of outcome, but it also equitized and gave real powerful value to a lot of employees. And this was just before, the holidays. And I distinctly remember it was actually during COVID. And so we had to do this call, closing call, and everyone was so appreciative. But the very next time I saw that group, and there were probably 40 people in this equity construct, they were all coming up to me saying, "You guys really changed our life," and that was just a great feeling. I mean, I really want to do good in the world, and of course, we're in business to make money. But when you can have an impact like that through your work, that's got to be one of my favorites. So.
Yeah, no, that's great. That's awesome, and I appreciate you sharing some of that feedback. We'd like to get a little bit of background about Republic and how long the firm's been in existence, and how did Republic come to be? Tell us a little bit about your background in mergers and acquisitions, going, I guess, as far back as you think necessary to talk about how you transpired to form this company.
Yeah, look, I mean, the first key point is I started my career as an advisor. I was working with families and working closely with them, and it was a very consultative approach in that I would complete, a 25 plus page fact finder around what was important to them, and that kind of taught me very early on with clients to focus on what are their goals, what are they trying to accomplish, and that kind of set the course for me. I ended up leaving the financial services world to do some nonprofit work. But when I came back, I had ultimately got an MBA. I built a couple of businesses doing transactions. And then finally, I ended up in a portfolio company of the Carlyle Group, the second largest private equity firm in the world at that time, in their financial services group. And I was working on some transactions with them, with RIAs and things like that. And I realized that there was a huge opportunity to build an investment bank that was really focused on what I call outcome focused, doing transformative, significant things for firms. We do valuation work. In fact, we've done some recent valuation work on some of the largest transactions in the industry. We do that type of thing. We have an amazing enterprise advisory group. For example, Amy, who leads that in our group, recently was overseeing succession for 40,000 employees globally. So she has a enterprise level succession planning for firms that need to replace 50, 100 advisors. So just a different level. So we've invested heavily there, but we really also want to drive outcomes. I started the firm 9 years ago. As best we can tell, in 2022 and 2023, we advised on more wealth management AUM that was transacted than any other bank in the space. And so, of course, we're proud of that. But so we're a true leader in this space, and we're often doing some newer, unique things. We helped creative planning a couple of years ago make the largest CPA acquisition in wealth management history. That was our idea and our project, and so things like that. But we're trying to be a real driving force in the industry, and we love this industry and believe in its values and the people in it.
Yeah, I mean, the M&A activity in the wealth management space has seen tremendous growth over the past several years. We Succession Link, which is now FinLink, has seen a massive growth spurt in terms of number of users on our platform.
Definitely.
One of the reasons why I think we're so excited to partner with Republic is, before we were really just a two-sided marketplace, a dating website, so to speak. And we'll talk more about our partnership in an upcoming press release, but we're super excited now going forward that we have the expertise of a firm like Republic that can really help consummate some of these deals. We get questions all the time from buyers and sellers alike about having additional resources to really go out there and structure a succession plan or find acquisition targets, not only from the valuation side, but also from a legality perspective.
Sure.
So again, we're super excited for our partnership. Private equity, they taken a bigger step into the space. I don't know, for what, the past 5 years, 7 years. Do you think that that's a driving force in the valuations increasing to where that they've kind of ended up today? And what are your thoughts on the current status of valuations for RIAs? Are they leveling out? Do we see them continue to go up a bit?
Yeah, sure. So first, I would say that I think valuations remain very strong for a high quality firm. If a firm has issues or challenges, investors are being more selective. They have more choices than ever. Every firm should realize that they should not go out into the marketplace to sell, whether it be a minority transaction or to sell all the firm with the attitude that, hey, it's a seller's market. It's still true that it's a seller's market, but the buyers have the most choices they've ever had. They have the largest list of people open to talking with them, and so they're becoming more selective. You can still get a great value, you can still accomplish a transaction, but you need to be strategic and realize you have competition and that small things matter more than they used to. And one of the important roles of a firm like ours is to help navigate those things, plan for those things, have adequate strategy around those things, and also maybe emphasize other strengths you have that could be overlooked by yourself or a buyer. So I would say the landscape is robust. We see more investors than ever in the space. Certainly, additional capital from a capital markets perspective theory does increase valuations, but I will tell you the biggest drivers in my mind are the demographics, the aging population. When I started the firm 9 years ago, I would talk to firms about transacting, and I almost got a very philosophical or moral response of, well, I love my clients, I would never sell, as if somehow that was a negative for the clients. I think people have become more pragmatic and realize that if something happens to me suddenly, that could really harm the clients. But being part of a larger firm with more resources and all that, it could be great for the clients. And so now what's changed is everyone will talk to you about an idea. And so that's leading to more willingness. So that's a big change in the market that's driving the activity. The second thing I would say is, people are aging and they realize, wow, I don't have as much longer runway as I used to. And then finally, I would say that there is a great deal of investor confidence in our business models post-COVID. I mean, the business model performed extraordinarily well. So when you can align demographics that we have with people retiring, needing to consolidate, and yet the firm formations in the space are still exceeding consolidations, right? We're both expanding and contracting at the same time. And you can align that with the excellent sources of capital. That's a tremendous recipe. But my view is it's all of those things are driving valuation, and the demographics aren't going to change. Could there be a really bad outcome for a private equity firm that gives some people pause? Yes. But I think we're seeing a lot of, $5 billion firms buy $2 billion firms, that kind of activity. There's more debt than ever. We are actually sourcing and going to be able to provide more attractive debt in the marketplace. So a lot is happening. And then finally, I should say, I like to point out that part of what's happening is we have enterprise value held at the wirehouses or other, large corporate entities, that when those assets leave with an advisor and go, and that advisor gets some equity, enterprise value is shifting, and it's
Yeah.
huge, and that is going to continue. So align all of those pieces, and I think we're in a strong position for strong valuations going forward for some time.
Yeah. Yeah, you make a great point. The shifting, the aging population. You and I talked about this a couple of months ago. We have 13,000 users on our website that indicate they have no succession plan. So the numbers are
Wow.
staggering. Yeah, it's an incredibly large number. And part of the reason why we built what we've done over at FinLink is to really bridge the gap between those that don't have a plan and finding an appropriate plan or a suitable successor within the industry, whether it's somebody nearby, whether it's a larger firm that's a national acquirer, or a firm that can implement a succession plan. So you'd mentioned some numbers, some fairly large numbers, $5 billion firm acquiring a $2 billion firm. Give us a little bit of an idea of the type of firms that you guys work with, whether it's larger firms, middle market, smaller firms, all of the above.
Look, we work with all types of firms. We've certainly been fortunate to work on larger transactions, but what I would say to a firm owner of any size is this is our expertise. This is what we are skilled at doing, and this is what we enjoy. So we've certainly had many smaller transactions. I was just pointing out that it doesn't necessarily need to be private equity who typically, is investing in someone that's 10 or 15 or 20 billion. That it even downstream from there, there's drivers for activity. It was kind of my point there, Nick. But look, I think something I mention often. There's a couple of major university studies that show that if someone selling a company will engage an investment banker, keyword investment banker, not a consultant, not a business broker, but an investment banker, on average, it'll increase their sales price 24%. It's remarkable. And one of the messages I
Yeah.
have in the marketplace right now is, one, obviously I want wealth managers and financial advisors to realize what a huge delta it is. I've done my own internal transactions and I've had an advisor. So I heartily encourage you, even if you don't hire Republic, please hire someone competent and experienced. I promise you it will make a tremendous difference. But also, Republic is working more with the underlying clients of wealth managers. And one of the messages I have is, I know as financial, and look, I love our community. I love financial planning. I love wealth management. And I'm a big believer. My wife and I recently endowed a wealth management center at the University of Texas because we want to give back. But we're really failing the many owners of private companies that are our clients. We aren't talking to them. We aren't asking what their plan is. And we certainly aren't, as some of the financial advisors, recommending they get professional advice. If you can do something as a financial planner to make a 24% difference, with many cases the largest asset, wow, talk about having an impact, right? So I'm trying
Yeah.
to get that message out both to the financial advisor for his or her business, but also the clients that they have.
Yeah, no, that's a great point, and congratulations on the endowment. It's an amazing milestone for you, and certainly it's great to see. Um,
But thank you. We're like shocked when we started working with the program 3.5 years ago. We had no idea this would happen. So we're be able to do this. So we're extremely thankful, truly.
I think with all that's going on with Republic, we'll definitely have to do a second episode, because we've only got a couple more minutes here. But
Thank you.
can you give me an idea, give our audience an idea of what are some of the pitfalls, or what are some of the things that, when either entering into a purchase agreement, right, for acquiring a business, or putting together a succession plan, whether it be a near term or more longer term succession plan, what are some of the pitfalls or red flags that a firm on the buy side or the sell side might want to look for that could make the deal go south?
Yeah, so couple of pieces of advice around this. First, I always encourage everyone, never share your financials until they've been professionally reviewed and updated and adjusted by someone like us. That will absolutely impact the way the potential buyer looks at you. So that's the simplest rule I could give you. Never share their financials until there's been a strategic review and a plan and a presentation of those. So that's a simple one you can control. In terms of things to watch out for in a purchase agreement, if you're doing a minority transaction, you need to have a discussion or a plan or a thought process around how you will exit in the future. there are times when you should have some type of plan for that. And there are times when putting a plan in place could be detrimental to the relationship. And it could go either way, but it's something you should be thinking about, so that in 3, 4, 5, 6, 7 years, if you decide, I love this minority partner, right? Or you may decide, for the health of the relationship and the way it needs to work, that you need to wait and negotiate that later. I've seen both scenarios, but that's an important one to think, is make sure that your professional advisor, and obviously selfishly we hope it's zero counsel. We have solved a lot, and that's always surprises people that we're on every legal call. And again, I think it's critical, because sometimes the attorneys, you have to remember, their role is very important. I think I respect them tremendously, but they're the only party in the conversation that gets paid no matter what. Our seller, our buyer, the bank, the advisors, we all very invested in this turning out. And sometimes for them, their first job, I mean, not sometimes, it's always to mitigate risk and plan ahead for that. Your goal as a seller might be, look, I will take on some risk. I want to accomplish this transaction. So I think it's really critical to keep your professional advisor very close to your counsel, have them coordinate together. And in some cases, the business decision should rule the day, not the legal perspective. Quick example: I'm on a call, huge transaction. There are like 3 national law firms involved, and our clients' counsel comes to and our client's like, whoa, and the lawyer's like, yeah, this could be a problem. And I couldn't help myself. I said, Steve, I got to ask you a question. You've been in practice 35 years. You're a tremendous lawyer. In your 35 years of M&A experience, how many times has this happened? And it got quiet. And he said, well, never, but it could. And my client said, this conversation's over. We need to move forward. Because I could tell there was no way to solve this risk. It's like, it's just part of, so things like that, and that deal went on to become deal of the year in financial services from M&A advisor. But, there were moments in that transaction where the legal side almost went off the rails. So you need to stay really close. So those would be my 2 probably clearest pieces of advice.
Yeah, no, that's certainly insightful. Thank you for that. I know that you've got to run. We're on a tight schedule here. We're approaching our time limit for this podcast. We appreciate you giving your feedback and expertise on this topic. We'll certainly be doing additional podcasts with Republic down the road. I know that we're going to be diving into valuations.
Yes, excited about that with you.
Yeah, we've got some exciting valuation stuff coming out in terms of a partnership with FinLink and Republic. One more question for you, more on the personal side, John. If you weren't doing mergers and acquisitions, if you weren't the CEO of Republic, what would you be doing?
Oh man, that's a tricky question. It would be some type of nonprofit work. I would be, my wife and I have a real passion for young people, both sort of teenagers and younger people, and we've both spent a fair amount of time away from work doing things like that. It's something we enjoy. We think it's part of our calling and mission in life, and we gain a fulfillment from it. And when we work on those things, I call it getting help. I always say you can build the sailboat, but you cannot make the wind. And when we apply ourselves to try to help others and young people, great things happen for us that empower us to be able to do it. A bit like the Wealth Management Center, we were empowered to do that. We started at a time when we weren't in a position to endow the center, but we just wanted to do all we could. And so it would be something like that.
That's great, John. I appreciate that. And that's good to hear. And again, thank you so much for joining our podcast today. We'll look forward
Thank you for having me, Nick.
Yeah, we'll look forward to providing our audience with some additional details about our partnership, how to get in touch with Republic, whether they're on the buy side, the sell side, interested in valuation services. We'll get them in contact with you. But thanks again, John. We appreciate your time.
Thank you, Nick. Have a great day.